tariffs will affect the economy?
Stocks go down, it's good news, just like when hamburgers go down, it's good news.
Don't worry about making the most money this week or next month. I mean, nobody buys a farm based on whether they think it's going to rain next year or not. They buy it because they think it's a good investment over. Because you could buy a 30-year strip of bonds and guarantee yourself for 15% a year, and a business.
Can I just ask you a couple of questions about kind of how you see the state of the economy right now?
Well, I think that's the most interesting subject in the world, but I won't talk. I can't talk about it. No, I really can't.
How do you think tariffs will affect the economy?
I mean, tariffs are actually, we've had a lot of experience with them. They're an act of war to some degree.
How do you think tariffs will impact inflation?
Over time, they're a tax on goods. I mean, you know, the tooth fairy doesn't pay them. I mean, and you always have to just, and then what? You always have to ask that question in economics. Always say, and then what?
So is there an answer for that when people say, you know, inflation persists, consumer prices keep going up, when's the end in sight?
No, prices will be higher 10 years from now and 20 years from now and 30 years from now.
And what do you think about what's happening in Washington right now? About efforts to
I think it's Washington.
Yeah.
It's, you know, technology changes things, all kinds of things, but Washington is Washington. And the problem with politics is that you tend to have to make tiny compromises as you go along.
And what do you think about Elon Musk's efforts to cut?
Well, I better not get into that. Oh,
do you talk to him at all?
I've talked to Elon a few times.
And any thoughts about his current efforts in Washington? No. No. You've always been bullish on American companies.
The majority of any money I manage will always be in the United States.
And why is that?
It's the best place. I was lucky to be born here.
Anytime stocks go down, as far as I'm concerned, I like it because I'm a net buyer of stocks. I've been buying stocks ever since I was 11 years old. So when stocks go down, it's good news. Just like when hamburgers go down, it's good news, or Coca-Cola goes down, it's good news in terms of anything I buy. But you know, stocks are going to go down. You could probably look it up as to what percent of the days, since I was born, they've gone down, and maybe it'd be 30% or something like that. And you can't predict what stocks will do, but in the short run. But you can predict that American business will do well over time. And just take the 20th century. Stocks went from 66, the Dow average, 66 to 11,497, and you were getting 3 times as much in dividends as the whole average was selling for at the start. And you had 2 world wars, and you had a Great Depression, flu epidemics, all kinds of things. American business will do fine over time, and if you own a piece of it, and if you don't beat yourself, the only person that can cause you to get a bad result in stocks is yourself.
Any word of advice you give to somebody who's a young investor who would like to emulate you, what you would recommend that they do to kind of build something close to what you've done?
I think you should look for the job that you would want to hold if you didn't need a job. I mean, you're probably only going to live once. Shirley MacLaine may differ with that, or a few people, and you don't want to go sleepwalking through life, and you're really, whether you make X or 120% of X, it really isn't remotely as important as to whether, in most cases, you marry the right person and you also find something that you would do if you didn't need the money. And I've had that job for 50 or more years, and I was lucky in that I sort of found early on what turned me on that way. But don't settle for something if you can possibly. Don't worry about making the most money this week or next month. I mean, when I went to offered to work for Ben Graham, I said I'll work for nothing, and I meant it. Just the idea of being turned on. So look for the job that turns you on. Find a passion. It is an unbelievable company. I mean, if you look at Apple, I think it earns almost twice as much as the second most profitable company in the United States. It's a wide gap. I mean, it's an amazing business. I mean, here's a company that's, whatever the earnings are, 60 billion or whatever, and you can put all their products on a dining room table. I mean, that's not the way it used to be in this country.
There were a lot of doubters on Wall Street before those numbers came out this week. Were you in the camp that was a little worried about what was happening?
Well, we don't own it for the next quarter. I mean, it is incredible to me how you read the investor conference calls after reports, or you read all the analyst reports, and they talk about what it's going to do next year. Nobody buys a farm based on whether they think it's going to rain next year or not. They buy it because they think it's a good investment over 10 or 20 years. So the relevant question when you're looking at buying part of a business, which you're doing when you buy a stock, is where's it going to be in 10 or 20 years? It may be that you don't know, in which case you don't have to do anything. But the idea of spending loads of time trying to guess how many iPhone 10s or whatever it may be are going to be sold in a given 3-month period or something, it just, to me, it totally misses the point. I mean, it was like worrying about the number of BlackBerries, 10 years ago. And then what really counted was what was going to happen over the next 10 years.
In 1982 or 3, when the long government bond got to 15%, a company that was earning 15% on equity was worth no more than book value under those circumstances, because you could buy a 30-year strip of bonds and guarantee yourself for 15% a year. And a business that earned 12% was a subpar business then. But a business that earns 12% when the government bond is 3% is one hell of a business now, and that's why they sell for very fancy prices.
So 3% is a long way from 15% that you were just talking about. But
I watched it go from 3 to 15, though, too.
Right. Is there an inflection point on that way? Because people think, oh, my gosh, we've gone from 2.4% to 2.9%, and that's a big difference.
That's not much.
Historically speaking, that's still the way we should be measuring these things,
Absolutely.
not on the absolute movement or the percentage gain movement over time.
2.4 to 2.9 is nothing if you're comparing it with businesses that earn 12% on equity and reinvest. And the S&P, you can just look at the figures for decades, has earned on tangible equity. It's earned a lot more than that, and it translates into higher prices, and it should.
Is there a tipping point along the way, or is it a gradual decline in terms of
Nobody knows. Yeah, but it is gravity. I mean, if you told me interest rates were going to be 15% next year on long bonds, there's a lot of equities I wouldn't want to own now, and I would buy a lot of governments at 15, and I kind of wish I had it in 1982, but I didn't.
If you found this video valuable, don't forget to give it a thumbs up, subscribe for more content, and share your thoughts in the comments below.